Yo, good evening everybody. It's 9:32. We're gonna get started as always 5 minutes after the session starts. So we'll begin at 9:35. I see a bunch of people dropping their locations in the chat already. Shout out to y'all. We'll get started in about 3 minutes and I'll say hi to everybody. Alright, what's going on, family? Let's turn this music down a little bit. Let's get this started here. Alright. If you guys can hear me, if you guys could see my screen, if you could see me, let me know in the chats. Drop some twos in the chats for me. Let me know that you guys can hear and see me while I pull up TradingView there for you guys and the chat here for me. Let's see, we got some twos in the chat. Shout out to you guys. Thank you. Let's see who we got in the house tonight. We got Cody in North Carolina. Shout out to you, bro. Victor, Houston. We got Aldo out in Houston as well. Shout out to all of the Houston family. We got New Jersey in the house. We got my boy Nico out on the road. Shout out to you, bro. I know you making that cross-country move right now, so hopefully you're driving safe and can get some value tonight. We got Albuquerque, New Mexico in the house. We got Dom. What's good, bro? Good to see you on here. We got Jay again out in Houston. Houston being here is strong, man. We got a lot of people from out in Houston on here. Kim from out in Brooklyn on here as usual. Shout out to you. Good to see you. Let's see who else we got. Got a good amount of people hopping on tonight. Boy, Abel in the house. What's good, Abel? Alright, shout out to Abel FX. Abel, I gotta actually make you a mod, bro. I need to do that. But shout out to Abel. Johnny out in New Mexico. Cali Gang's here. What's good? Yuma, Arizona. Shout out to the AZ family too. It's funny, I was just looking at some Airbnbs out in Arizona. I was looking for August, but I know how Arizona be in August, so it might be like pushed back to September, but I'll be out there soon for sure. Not in Yuma specifically. I'll be probably in the Scottsdale area though. We got Louisiana in the house. Jude, what's going on? We got FL, we got Raleigh, we got LA. Right, shout out to y'all. Good to see y'all here tonight. So family, yeah, welcome to the Sunday Market Weekly Outlook. We're gonna keep this pretty simple tonight. As always, we're going to take a look at the economic calendar. We'll go through, what we're expecting on the fundamental side. As you guys know, we're big on fundamentals. We like to play the rumors the days up before fundamentals, right? We're not necessarily playing the release if you're new to the stream, right? We're going to look at fundamentals from the aspect of, what can we start to play early week that we can expect some moves to happen later as that news kind of develops and releases out, right? So we're going to take a look at that. We'll go over some stuff from the watch list. We'll probably go over Nasdaq, gold, GJ, oil, and maybe some of the cryptos as well. I'll kind of break that down, but I'm already kind of solidified on what I'm doing with these on the week, so we're not really making any adjustments there, but I'll go over what we saw and why we're already in positions on these. If you guys have any suggestions, anything that you guys want me to go over, you guys could drop that in the chat. Save that for the end. You don't have to drop it right now. We're going to go over a few things and then we'll open that up. But if you are looking at stuff, I would be happy to give you my opinion on it as well. So let's take a look at the news for this week. I've already kind of brought up the economic calendar. This is going to be for this week. These are all of the important events. Am I still in Nas? Yeah, we'll go over the Nasdaq trade. We are still holding partial profits, partial runners on Nasdaq. But this is the stuff we're looking at this week, right? So Monday, there's really not much going on. There's actually a few holidays. Shout out to the Queen out in New Zealand. It's apparently her birthday, so I'm sure they're gonna be partying hard out there. South Korea's got their Memorial Day, and then Switzerland has whatever Pentecost here is. I'm not even entirely sure what that is. Maybe I should. Maybe I'm just uncultured. I don't know. Not entirely sure what that is though. We got Baltimore in the house. What's going on, Bert? Good to see you. On Tuesday, things get a little bit more interesting, right? We actually have some data releases coming out. So right after midnight, right, about 12:30, we have interest rates out of Australia. They are expecting an increase in interest rates. And if you guys have been on the past few sessions, we've kind of talked a little bit about interest rates. There have been a few releases the past couple weeks. So just, guys, write in the chat, right, if they're forecasting what's essentially a quarter of a basis point, 0.25 increase on interest rates, right? Is that good or bad for the currency, guys? Is that good or bad for the Australian dollar? While you guys answer that, I'm going to just close this door real quick. All right. All right, so guys, we're expecting AUD to hike rates this week on Tuesday, right? That's the forecast. What are we expecting the Australian dollar to do? Is that going to be good or bad for the Australian dollar? Charles said bad. We got any more opinions on that? Bad. There's a few people writing bad. So guys, this is actually technically good. Right, Alex got it, right? Technically good, right? When a currency is increasing its interest rates, it's trying to make its currency more appealing. And when it's more appealing, you can earn a higher interest on it. It also makes borrowing a little bit more difficult. It basically just tightens up the money supply, makes it more appealing to hold the actual cash rather than to lend it out. Makes that all more expensive. And when that happens, it's often seen as better for the currency. Now, interest rates is always going to bring volatility, that's for sure. But it does make the Australian dollar more appealing. Now, the people that said bad, I won't necessarily say you're entirely wrong, because the rate they're going to is going to be seen as, bad or not appealing. Yes, they're increasing it. They're trying to make it more appealing. But if you were to go look at all the other interest rates across the board, specifically on the dollar side, right? The dollar is sitting at a higher rate than this, right? What are we at right now? We're at, oh man, I'm not gonna remember. I think we're like 2.25. Are we at 2.25 yet? I'd have to go back and see what we actually are. I'm pretty sure we're sitting at like 2.25 or 2.5. But either way, we're over the 1% benchmark, right? So no matter what in this scenario, the US dollar longer term is still going to be more appealing, but you may see some spikes to the Australian dollar side just on this release. Do you want the AUD pairs go down, or do I have it backwards? So with the long-term effect of this, again, it's going to be whatever their rate is versus the US dollar, right? So if the US dollar is at a 2% interest rate and they're at a 0.5% interest rate, even if they raise their rate, it's going to be seen as technically good, right? Because they are increasing their rates, but they're doing so at a level that's still below other currencies that are in that kind of same rate hike environment, right? Like the US dollar, the pound recently did that. We also have euro rates this week that we'll discuss. So this is going to look more appealing against certain currencies that have a lower interest rate than 0.60%, right? If they have a higher interest rate than 0.60, then that currency, what specifically we're talking about the US dollar, is going to be more appealing. So on Tuesday here, when you get this kind of release, I would expect AUD USD to actually push to the upside off the release, but end up closing that session lower. And it might even take until New York session. It may not immediately happen during London, right? You might get that spike up, and then, you know, we'll look at the charts and everything like that, but it'll probably end that session lower. Also out of Tuesday, we have PMI out of Britain. They're expecting this to kind of remain the same. I would say PMI will probably rise, just based off US numbers. US PMI has risen, so it's, you know, we're just going to stay with the market. They're probably going to expect some sort of increase here. If they do see a decrease, that'd be interesting data. We can maybe start to look at that further in the week, but I would expect PMI to increase out of the pound. We have GDP for the yen. GDP there not looking good either. This is a Q1. I don't know if that's a readjustment. I don't think it's a readjustment. We also have interest rates out of India. I personally don't trade anything that this would necessarily affect, so this is not going to be news for me. We also have more PMI out of the pound. We have crude oil inventories on Wednesday. This happens every week. Not really a concern, but if we're looking at oil and we're looking for entries on oil, you know, these numbers can affect what we're looking at there. Thursday, as we discussed, they do have interest rates coming out for the euro. The euro is one of these, in comparison to AUD, right? If you kind of see where they are now, they're at a 0% interest rate, right? 0.0, right? So they're forecasting 0.0. They're probably going to come out with 0.0. That is the expectation here. So when we look at AUD, right? AUD again is going from 0.3 to 0.6. Because the ECB interest rates are at 0.00, technically speaking, right? Technically speaking, on a fundamental standpoint, the Aussie dollar would be more appealing than the euro dollar. So if you're looking at a pair like euro AUD, you would, again, just based off the interest rate decisions, right? There's plenty of other factors in the market, but just based off that, you would expect the Australian dollar to gain against the euro. And with these decisions, maybe we'll look at euro AUD, maybe we'll kind of see if there's an opportunity there. But the big thing about the ECB interest rate decision is not the 0.0%. It's actually going to be the policy statement, because it's going to be less about this number and more about what they're going to do, right? Are there going to be any hints of increases coming? Are they going to adjust their timetable? What are basically they planning to do? Are they going to plan to stay at zero? Because right now we're in an environment where a lot of currencies, a lot of central banks are actually increasing rates. So for currencies that are kind of lagging behind on that decision, sitting at zero, much like the euro, much like the Japanese yen, which is actually at negative rates, we need to kind of keep an eye on their policy statements to see if they're going to be changing that tone, because that's certainly going to affect institutions and people that are making big decisions. So on Friday, we also have interest rate decisions out of, well, what is this, Russia here. We have CPI for the United States. This is going to be very important. I'm watching this personally. And then we have some unemployment numbers out of Canada, which, again, personally for me is not going to be anything that's going to affect my trading. But if you're trading the CAD, that's going to be a big part of that. So our fundamental week looks pretty good. The only thing that I'm really going to be paying attention to personally is this ECB news. I will look a little bit at this Australian news, but again, this is not a pair that I trade, and I'm only really looking at this from the standpoint of it's probably going to add some volatility to gold, because gold is a commodity, a big commodity of their economy. So depending on how their economy does and how the Australian dollar is doing, you might see a little bit of volatility correlation inside of gold, and I might be able to like grab opportunities based off that. So pretty light week in terms of U.S. news. It's really just this ECB news that we're looking at. So that being said, let's jump into some charts. I did want to begin with the Nasdaq. So Jay asked in the chat if we're still in Nasdaq from last week, and if you guys were on last Sunday's call, or even the Sunday before that, right? If you've been, we're live every Sunday here at 9:30 Eastern. If you guys are on those calls, drop a 1 in the chat for me. Let me know if you guys are on those calls, because Nasdaq has been basically listening to us to a T. Is like the short way to kind of phrase this. A lot of you, again, if you've seen the past videos, if you've not seen them, go back and watch them, because you're going to get a lot of value out of just the cycles here, right? Yeah, we have CPI on Friday. That is a big one. Honestly, I'll probably look to be done before Friday, honestly, able, because that CPI is going to be interesting. And for those of you that are curious why I think that CPI is going to be interesting, it's because PMI last week came out higher than expected, which is kind of why you had like some volatile days on the indices. PMI actually came out higher than expected and kind of sent us back to the downside. So yeah, so based off PMI, I've kind of changed my idea about CPI. I used to believe that CPI and just inflation in general was going to begin to contract, meaning kind of like decrease, plateau, really kind of stop rising. But the fact that PMI didn't pull back at all makes me feel like CPI is going to at least continue to increase for one or two more releases. So I wouldn't be surprised to see an increase in CPI this week. It's actually going to affect what I'll be looking for on the Nasdaq. I'll be looking to exit some of these positions we're about to talk about. So yeah, there were a bunch of people that were on the call in past weeks, and he's asking about the positions down here because we've been long Nasdaq basically since it formed this giant accumulation. You know, we basically identified this, you know, back when it was creating these lows and it sprung the lows. I'm not going to go big deep into the analysis. The other videos have that information for you. We were basically long ever since we kind of formed what's this protected low, based on our logic, and we were kind of just taking buys in this area, and we've been holding them ever since. And we did try to grab some re-entries last week. We were in this and it moved up. We booked partials and then it came and took us out, which was kind of annoying. So we've been kind of riding this bullish for the most part. And just to break down, I'm going to clean this chart up for a quick second just so I can re-show you guys from kind of a clean slate what we're now looking at. Let's get rid of the PSY and get rid of that. Get rid of these two, even though I'm going to just put them right back on the chart as we explain. Okay. All right, so from a cycle standpoint, guys, right, when we're looking at this, this is our accumulation, right? I'm not going to sit here and talk about the equal lows, the spring, the test, the LPSs, right? If you guys don't know what that stuff is, it's all available either on my YouTube channel or in the course, right? And then we talk about how from this accumulation, we got this markup. And we kind of looked at last week as like this being basically a new range, right? We didn't really expect this to go anywhere. If you go back to last Sunday, we kind of talked about how it's expected to play around with the lows, but ultimately we do expect it to kind of like cycle out. At this point, this range doesn't really tell us anything significant. It's my belief that at this point, we're just moving into what we call a phase B environment. And a phase B environment, if you're brand new to supply and demand trading, Wyckoff logic, a phase B environment just basically means we expect choppiness up until of a point that we get liquidation of the range either at the highs or the lows, right? So basically what we're talking about here is like just a bunch of noise that we're not really interested in playing on the 4-hour perspective. That doesn't mean that we can't find lower time frame stuff, 15-minute plays, 5-minute plays, 1 hour wipes of liquidity and still trade inside of this range, but it does mean that we're not committed to it breaking either side any time this week, probably up until that CPI release, right? The market's probably going to sit here taking a bunch of data all week and really kind of just lean into that CPI release, right? So that's kind of like my roadmap for this. Now, full disclaimer, I am in a buy from down here on lower time frame stuff, so just like full transparency, like I do expect it to return to the upper bounds of the range up here, but that's just kind of lower time frame scalping stuff that I'm doing. So when I'm looking at this and I don't expect much to happen, basically all I'm doing is I'm going to wait for it to, again, develop out its noise, and as it tests this high and these lows, like we always do, we're going to monitor the way that price, right, the price action and the volume down here kind of responds. So just a bunch of different roadmap examples, right? If we do come up here and the buying activity is constantly increasing and every pullback that we have is low volume, you know, sell-offs, I'm going to expect this to be reaccumulation. I'm just going to wait for it to pull back deep enough for me to grab my entry, right? coincidentally, on the other side of this, because we don't know what this range is yet, there's no real data here, right? We have to wait for it to reveal itself. Same thing if it just forms structure, and as it's testing these lows, right? Whatever the market structure forms out to be, but as it's testing these lows, we're going to be looking for spikes in sell volume that supersede anything else in the range, right? So if it pushes down here and we create new lows, and the effort, oh, are we still alive? Yeah, we're still alive. Okay, cool, right. And we form new lows, and we're doing that on higher spikes of volume, then we'll build the case for this being a distribution, and then look at our, potential entries later in the range. So honestly, for those of you that are looking to play Nasdaq this week, I would expect it to kind of fully stay range bound, right? So range traders, I think this is your opportunity, right? I think swing traders kind of have to take a step back, delve onto the lower time frames if you're gonna play. But if we didn't run from this effort last week and we completely erase this move, to me, we're range bound, right? And just from a macro scale, right? My white golf traders know. You guys can look at this as your PSY, your buying climax, your AR, ST, ST phase B, another up thrust. And we just know that we're a phase B until we get some sort of phase C signal. So on Nasdaq, again, I'm not looking at anything too crazy. I'm going to show you guys why I entertained a buy. And it starts on this 4 hours. So some of the people in the inner circle, right? Shout out to all my inner circle members. Some of the people in the inner circle, I had brought to their attention, because we also looked at this on Ethereum, right? This move down was super low volume. Well, not super low volume, but lower volume, right? And because I know that this was probably going to stay range bound, right, I'm okay playing the lower time frame action. Right? I'm okay taking a buy because I know that the sellers are not, at least right now, not committed to bringing us lower. If I break this down on a 15 minute, or not even, I'm playing like a 5 minute on this, to be quite honest with you. The entire reason I went for a buy is because this has a lot of signs of being what we call a type 2 accumulation. And if you don't know what a type 2 accumulation is, you guys can do this, right? If these are unfamiliar words for you, you just type in accumulation type 2 on Google, and you're going to get the schematic for what an accumulation type 2 looks like, right? That's what it looks like. Now this is just structure, right? This is just showing you the structure. There's also volume that's important on this. There's a lot of other factors, but this is a schematic for a type of accumulation where you kind of form this inside kind of range. You never spike any sort of liquidity, and then you just kind of continue higher. And that's what I saw here, right? So that schematic and this range is exactly what I see. So just to kind of label this out for you guys, right? You have your PSY, selling climax, ARST. For those of you that kind of just need a quick little visual of the same thing playing out here. There's your PSY. Here's your selling climax. Here's your AR. Here's your ST. Right? So this structure, you're just going to look at this structure and compare that to this. I'm going to actually see if I can put these side by side for you guys. Oh no, it made the picture smaller. Alright, so again, your PSY, is that showing okay, PSY, selling climax, ARST, right? Okay, I put PSY like the distribution, but same thing. ST, and then your ST in phase B, which is a new low below the ST, sometimes even below the selling climax. In this case, it didn't go below the selling climax. That's okay. Alright, so we have ST phase B. And then it kind of played out to the point that it gives you an LPS. Now, identifying when this is ready to take off is, I won't say tough. It's not tough. It's really experience based. In order to understand why I took an entry, you really have to understand what's considered session trading or time of day trading. So for like the people in the inner circle, right? Like if you guys know why I entered on this candle specifically, right? Just write in the chat. I'm curious if anybody knows exactly why this candle, and you would not know this if you're not in the inner circle. So I'm specifically asking my inner circle people right now if you guys know what time this happened at and why it's important. But I saw this LPSY, basically this little spike below this range is why I took the trade. Right, price spike down as it came back above the range. That's when I looked to enter the trade. I can tell nobody's gonna know exactly why, but this is the 8 p.m. Eastern Standard candle open, which for me is a big execution time, right? So 8 p.m. Eastern Standard Time all the way to 9:30. If price grabs liquidity and closes back up, I'm in a trade 90% of the time, especially when I have the accumulation kind of dragging out. Fast move is fate. No, I mean, no, not always. It's decent logic. But it's not about how fast it happened. It's about what time it happened at. It happened right at the open of the 8 p.m. candle. I play important session opens, so it's like if you were gonna trade the London Open, right? You know how people take like liquidity sweeps right at the London Open, like the 3 a.m. candle opens by 3:05, 3:10, 3:15. It's grabbing liquidity, it closes back up, right? That's like the prime London trade that some people teach. Right, there's the same concept here, but it's just during the Asian session, right? That 8 p.m. Eastern Standard candle is like when the first little bit of like higher volume kicks in. And if you take a look down here, right, look, this is exactly what I mean. You see how it's very specifically at that open candle is where the most volume from the session was. So this is like the one attempt to kind of bring price lower, or in this case, it's capturing that liquidity and giving you that opportunity to just get into the market with super low risk. Because on this trade, it was very simple. Once this trade spiked down and it became back up, I entered here with just my stop loss below here. Because I'm not looking to hold a trade on this. If this is going to seek further liquidity, it's not going to get that from me. Right? I'm not going to sit there and do that. So that's why I took this trade. That's why I'm looking at that. Again, you have the 4-hour kind of cycle that I expect to kind of just be range bound, and then you have this little kind of 5-minute, 15-minute accumulation, and you just have that perfect entry at 8 p.m. to take. Yeah, that was, I mean, again, like I'm in this by myself, right? I know that nobody in the inner circle is in this trade. I know that I'm alone in this. To be quite honest with you, I hate type 2 schematics. They're not my favorite things to play because I like to see the wipe of the range, right? I like to see it grab fresh pricing, come back up. Like that's, for me, that's prime, right? Like when we took that on the 4-hour, right? The same idea, right? The wipe of liquidity came down, closed back up, and then we take the retests. To me, this is like my favorite kind of wipe off schematic. But I wasn't ignorant to what I saw here. You know, and this trade right now is paying out as a 1 to 3. And I'm going to follow my plan on the 4-hour, right? Because on the 4-hour, we don't expect this to really break a new high. So as this comes up into some supply areas, I'm looking to get out. Right? But these are examples of little scalps that you guys can take. Again, I don't expect too much out of Nasdaq this week. I do think we kind of sit around here. If I had to look at a setup that I'm really eyeing on the Nasdaq for this week, I want to see what happens when we come down to this 12,241 area. I think what the ultimate path on the Nasdaq would be, you know, we form the phase B, we get all that choppiness, we kind of push lower here, grab liquidity, kind of come back up, and then wipe the top of this range, and then I'm looking to sell. I mean, I would love to see this taken, but as we move up into this zone, I expect another range. Right, so like this is my path on the Nasdaq. I mean, listen, all my entries are either killer or instant losers. So there's no, oh my god, look at Ethereum. Yeah, we'll get to that, Gold. So let's take a look at gold. Gold had a little bit of an interesting week last week. Let's just bring current weekly candles in view. So last week was really just up, down, range bound, no real action out of gold. Again, long-term weekly, we are still looking at like 1760, 1770 for our like area that price is going to get magnetized to, right? Expect a new cycle. The longer we sit up here, the more I think this area is just going to break, but nonetheless, we're expecting price to kind of still come down here. Again, we haven't done much. I want to analyze what happened inside of this price bar, because again, when we have like tight ranges like this, price is either doing something, right? It's either accumulating, it's either distributing, right? It's giving you some sort of footprint and hints about what it wants to do next. So if we come down to the daily, probably not the best thing to analyze it on. A lot of the information is kind of tight. Looking at this, I'm just kind of looking for any noticeable volume spikes. I don't really see any. It kind of suggests, again, this might be in the same area that Nasdaq's in, where it wants to sit here and create a broader range. I kind of have a feeling that's the trend for most things this week. So kind of taking a look at this, let's just delete some of this old analysis real quick. Let's take a look. Alright, so just marking out candles of interest, right? This is an area of interest. This liquidity down here is an area of interest. And then if you're looking at like just extreme order blocks on both sides, you have this one and this one. So you have your supply blocks and you have your demand blocks. Here's your supply block up here. Here's your obvious daily demand block down here. And then you just have what's called like middle of the range or reaccumulation liquidity, right? So we kind of take a look at that as well. There's a lot of supply up in these wicks, but that's kind of lower time frame stuff. I could break that down probably on like a 2-hour, 15-minute kind of chart a little bit better. Taking a look at this again though, you are mostly range bound, right? You pushed these highs, right? We pushed these highs here, and if we look at the volume associated with that move up, it is less than where it came from the demand, so it's natural that it kind of returned back to the range. Again, this is just very simple price to volume divergence, right? You guys, hopefully you see, you know, the demand that came from the lows, right? The effort behind it, and then when it goes to break up, the effort is lower, so it can't really achieve a full breakout. Yes, it creates a new high, but it can't hold that kind of pricing. So again, this looks like it's entering kind of phase B. This looks a lot like PSY action. This would kind of have to be your buying climax, although initially you might have thought of that. Buying climax, AR, ST up here, ST phase B, UT. Again, this screams to me that the range traders are going to win this week, right? The range traders, people that kind of sell at the highs, buy at the lows, you're going to have the most opportunity this week. If I had to look at some setups on lower time frames, yeah, I'd probably wait for this to creep up. I'd probably want to try a sell on this rather than a buy. So I'd be interested in what happens up at this 1860 level. All right, the path to this, because yeah, like there's a bunch of liquidity sitting under this, but I think it's gonna seek a decent supply to fall off of. So whatever the journey is up to here, right? Because we can certainly pull back, right? That's all irrelevant. I don't care how it gets up here, when it gets up here. It's just important that it gets up here, right? So kind of move up. I would imagine that we kind of play off of this, but I would also imagine that it doesn't hold. So I probably want to see a reaction. And then once we kind of like wipe that up into here, then I would want to kind of play it back to the downside. So I'm very specifically looking above this into like this range, but I want to see how it acts at that candle. Because I know markets are not perfect, and a lot of people are going to try to sell off this that have smart money concepts, and that's never the solution. So I'd be looking at a short like this. I probably would want to refine my risk, and you know, obviously when it's up here, but your setup would look something like this. Back down to grab, you know, this target and this inefficiency down here. So I think one of your best bets on gold this week is to look for the early week push up before we kind of come back down. I know a lot of my people that probably have my course are gonna be like, bro, but it like looks so much better if we could sell it off here. And like, trust me, I feel y'all. I really do. I would love that too. That's, you know, you might catch the L here, and like that might be the reality. But depending on like what price action looks here, this is like your easier early week trade, I think. Then kind of waiting for like the what we call like premium pricing back up there. Yep. Any questions on gold? Any questions on gold? Where's my Nas? There's Nas. Nas still pushing. Good girl. Alright, so let's take a look at, do I want to look at GJ? Yeah, I don't really... Buy entry for gold? I mean, if you wanted to look at the buy side on gold, I wouldn't be a buyer on gold unless we were below the 1837. I would look to short it to 1837 if that setup was relevant, but I would look to trade inside of this pocket to the buy side on gold. Again, it's all going to be about what happens down here, though. When I do these market weekly outlooks for you guys, it's showing you guys like the 4-hour cycle, right? Whether or not I expect the price to kind of stay range bound, or if we're looking to get those moves like we got in the Nasdaq where we kind of traded up. So because I'm range bound, you're either looking for sells from the supply or buys from down here. If you're looking for buys specifically, because that would be more in tune with the 4-hour cycle, I'd be looking back down to 1835. Yeah, the setup looks prime. It's just a matter of what happens at that level, you know. But yeah, if you were looking for buys, I wouldn't look for buys above 1835 on gold. We're gonna discuss oil real quick. We took a loss on oil last week. It was actually our only loss of the week, I believe. I keep saying that. We had like 2 break evens too, which technically we count as losses. But this was like a real stop loss that we took last week. Yeah, we tried to short it. We were just a little bit early. We kind of tried shorting some of this 4-hour action, and it just never worked for us. But I do want to kind of discuss oil. Oil, and my people know this, right? You guys know this. Oil is fundamentally very bullish. Like, in terms of like supply and demand, just what they're doing, gas prices are going crazy. It's fundamentally, this has no reason to turn around. There are a few technical reasons we're looking to attempt shorts, but when we attempt shorts like that, we're keeping the risk to reward very high, right? We're trading in very high liquid areas. We're not risking, 1%, 2% on these trades because we know we're against sentiment. We know we're against the fundamentals. But the technical reason we're looking at this is oil has traded into what are like essentially higher time frame order blocks multiple times, right? There's a weekly order block here, which I'm not even really bothered to break down. But the only important one that we've been waiting on for a while now is this area of supply up here. And another reason we're kind of looking at longs, hold on, let me just pull up another chart here. Oh, getting volume for this is always a pain. Right, so we've been kind of moving up here, and we got a little bit of volume here, but it's been kind of low. So I think if any sort of selling activity comes into this market up in this area, then I'm going to be looking for like lower time frame confirmations to go short. Now, to be real with you, the fundamental thing that's going to probably happen here is that this is just going to eat away and just eventually run up to like 140, 150. It's probably just going to slowly eat away at the supply up here until it just pops and squeezes everybody that is short. But based off of certain things that I see here and potentially what might form here, again, just because the risk to reward is so juicy, there are trades that I will risk 0.10, 0.15, 0.20% on, because again, if we were to catch an idea like that, right? If we were to play off the idea that, yeah, this order block is going to hold, again, I wouldn't be running a stop that wide, it would be tighter. But even if we assume, you know, a logical stop like that, we would be looking for a wipe, and we've been talking about this over a while, like kind of like a wipe of this lower 90s into like the mid to like, you know, what I call the true price of oil. I think the true price of oil is more or less in the mid 85s. I could be wrong about that. True price and market price are not the same thing, right? Everything has what you call like a true production price. Bitcoin has it too. When Bitcoin was at 68,000, it was vastly over its production price, right? So it happens, right? It's going to run based off fundamentals, market environments. But if we do get a return to like average, which again the market's not dictating, you know, this is a you know, 1 to 14 trade, and that's off a wide stop. So we're gonna monitor oil. I'm gonna be honest with you guys, I really do think that we just take another loss on this week, but there are a few of us that are monitoring this for potential really tight stop loss kind of trades. It's like, I know that doesn't help most people, but if you know what to look for, then, you know, it's better advice if you know what to look for. If you don't know what to look for, then you might have a tough week if you don't know how to spot a distribution up here. Any pairs you guys want to go over before we jump into crypto? Because I do want to talk about crypto, why we are long Ethereum. That was a trade that we were in. We're no longer in that trade though. So if you guys want to drop some pairs that you guys want me to look at, I will take those recommendations now. I'm going to talk about Ethereum here, why we're in buys, why we entered these, even though the charts looked nasty. So a few things that I was personally looking at. One, this is basically taking the liquidity here. It's very subtle, but it did, right? Very subtle. It did it by like just a few points. But we took the liquidity down here, and that's interesting to me because things like Bitcoin obviously pushed a little bit more down into its liquidity. So the fact that we kind of captured this and we held not 1 week but 2 weeks, I'm like, okay, there must be some sort of accumulation, some sort of absorption happening at this level, right? And if we kind of take a look at the 4 hours and the daily, right? When we were in this last week, right? We were trading in this area. We were actually in from the lows. We rode it all the way up to 2,000. We booked partials on the way up, and then eventually the market just kind of came back and took our, you know, trailing stops. After it made these harsh moves down, a lot of people were freaking out. A lot of people were thinking, you know, we're going to break the weekly lows. We're going to break the weekly lows. We're going to break the weekly lows. But we've talked about absorption, right? The concept of absorption a few times. And if you know what absorption is, or if you don't know what absorption is, it's when the market puts in a lot of effort in one direction, but they're unable to bring it past a structure point, right? So it's when they really try. It's when they put a lot of volume into the move, right? We take a look. If you just take a look at the volume, especially on this wick, right, this entire down move here, right? Look at the volume levels associated with this. It was unseen selling effort, right? We can go left. We can go left. Look. It's some of the highest concentrated selling effort, right? The most money exchanging hands in a while, with the exception of the buys that actually stopped the market, right? So, I mean, that was also sign number 1, which is why we were buying over here, right? But they put a lot of effort to bring price lower. And if you notice, they couldn't, right? It held a structure, right? All structure here is intact. Right, whether it's here, right, the major swing low here is protected, right, after what's significant selling action. All right, now the reason why we didn't immediately just go long, right, after this wick is because we know that wicks fill, right? We know that wicks fill. So we know that this wick is likely to get filled, right? Once this wick got filled, and it did so into just a very standard order block. Right, look at the very standard order block, look at the wick fill, look at the absorption. Right, that's three smart money Wyckoff confirmations that you could use, right, without even breaking the chart down any further. Right, when I saw this happening and I saw this wick fill, I immediately told the inner circle, look, we're buying this. We bought it Friday at 9 a.m. Right, Friday at 9 a.m. And I don't know when that was. My entry is actually, hold up. If you're in the first off, if you're in the inner circle and you're in Ethereum, drop your entry in the chat. I just want to make people know that I'm not capping, right? So if you're in this trade with me, drop your entry in the chat. I'll show you guys my entry. My entry was 1746.54. I doubt my camera is gonna pick it up. Right? But I don't know if you guys can see that. You probably can't see it. See, Michael's got 1749.57. That's a little bit, yeah, that's right. That's right with me, right? So we're long from 1749, right? So again, we're not just talking about concept or theory here. We're talking about actual execution, right? We're talking about actually spotting this happening in real time and then executing off of it, right? That's what the inner circle's about. We started buying early Friday. It was 9 a.m. Friday. I have the screenshot, right? So we're long from like right here. Right, we're long from right here. Right, and again, because of we had this absorption, we had the wick fill, and we have the order block, right, we take that trade. Now, for you guys, for the rest of you, you might be looking at this and be like, okay, well, you guys caught the bottom. That's good for you. How can I get into this market? Right, I would advise you to pay attention to any sort of pullback back into this demand zone. Sheesh, excuse me. So what happens when you guys talk and you don't drink any water? That's what happens when you don't stay hydrated. All right. Listen, I would advise you guys to look for lower time frame entries on this because we're playing all these people that were short here that are probably still remaining short are going to get squeezed. All right. This is the same thing that we played on the Nasdaq. Right, the same idea. Look, we were entering in down at the lows, and essentially we're like within this area right now of like Ethereum, where Ethereum is basically beginning to kind of break structure, and it's gonna go and it's gonna squeeze all those people that are late sellers in the market. Right, this area on Nasdaq is equivalent, in my opinion, to this area on Ethereum. Right, all of these people are going to get squeezed back out of the market. Any sort of smart money trader that's playing this order block is going to get squeezed out of the market. All right, these people are going to get liquidated just based off the higher time frame accumulation. So we're looking to ride these, and you guys can, again, find your own entries, and you guys can ride these as well. But we're going to ride the liquidation of this entire range. All right, so we're looking for a multi-$100 move back to the upside, looking at, I mean, personally, you guys know we're looking at like 2,400. We wanted to come play back up into this supply. I'd be okay with this taking this too, but as we break above this level, we'll be like 85-90% out of our position, because again, at that point, the average person is going to say, oh, well, LOL, let me just take, the break and retest, and like we're off to the moon. When in reality, it's like by the time we get up here, that's when it's going to like make its like deeper correction, and then it'll recycle out, and we'll have to reassess it at that time, right? And you can talk all day about what could happen up here, but that's not how we trade. Based off what we see happening down here, we know and highly expect it to come back up here, and then what it does after that, we will assess. 1748, 1753, and 1761. Sheesh, my boy, heavy on it. But Johnny's like, I'm taking all the entries. That was like me though. Honestly, I closed a lot of my positions. I closed a lot, stupidly too, because I had positions from here. I was in here. I was like every pullback, like every time it pulled back and grabbed liquidity, like when it did this, it pulled back under this range. Like I was buying more of it. So we were kind of just, again, that was me personally. I was just like a little flip accounts. I shouldn't have closed it all, but I cycled that money over into the Nasdaq. And, the Nasdaq has, I don't know. It's debatable which one I would have made more money on. How long have I been trading? I've been trading for 7 years. Since 2015. So yeah, it was like August of 2015 is when like I first downloaded MT4 on my phone. So yeah, it's been about 7 years now. Scared of U.S. recession? Am I scared of it? No, I'm not scared of it. I'll tell you guys right now. Listen, recessions, guys. Recessions are when billionaires. It's when wealth is created. Right? There's no greater time to make money than in a recession, a depression, when everything is down. Right? That's when builders build. That's when workers get to work. You know, that's when great things are made, and that's when and when great things are made, right, you can always invest into great things. So therefore, investments are always good too. But the problem with a recession is recessions, unfortunately, for 99% of people, really strap you for cash, right? Like inflation is crazy. Like there's people paying, like drop right now how much gas is wherever you're from, right? Whatever state, what country, right? Just drop how much gas is per gallon or liter for my, for the rest of the world here, right? Just drop how much that is, but just simple things like that, right, will cash strap people that, even if you know better, right? Even if you're like, I know that I should be investing, you just can't because of just the way the system is built, right? Because the greatest opportunity comes when the most people are at pain, right? So yeah, recessions are great, but let's be real, most people are, strapped for cash. Right, Roy says 689. This recession will make a couple millionaires. Yeah, absolutely. I mean, it'll make more than a couple, bro. It'll make more than a couple. It'll absolutely make more than a couple. Like right here where we are in South Carolina, gas is what's it, like 460 or something like that, I think. I'll be honest with you, like it's went up like every day the past week and a half, so I don't even really know what it is right now. 689, 402 Texas, 449 in Texas. Yeah, we got like similar prices to Texas. 499 in New York. Honestly, that sounds pretty cheap for New York. $5 in New York. I would have thought New York would have been up by like 6 by now. All right. So yeah, that's what we're looking at on Ethereum, guys. We're really just expecting. Like I'm expecting this thing very easily in the next like day or two to be back up at like 2000. Honestly, I mean, it goes without saying that if you are in the inner circle, you guys know we are capturing fresh liquidity, so that is a taking profit opportunity for us. To be honest, that's I'm scared. Yeah, I mean, listen, gas is one of those things. It's like what are you gonna do if like you don't like the price? Like what are you gonna do? Like not buy it? Like you can't not buy it. Like you need. I mean, to some degree, you need it. You know. Why did I close early? So okay. So first off, the positions that I closed were much smaller than my original position, right? So my main position down here on my broker is a 0.33, right? So I have a third of a standard open from the bottom. All my other positions were like 0.10s, 0.15s, a 0.05. And for me, like I'm always booking profits, right? Because the only way you're profitable in trading is if you actually make withdrawals, right? If you actually close stuff. Entering the market is great, right? But entering market is literally like it's not even 50%. It's like 20%, 30% of the game. Managing the trade, exiting your trade, making withdrawals, that's like the real money. Right, so like when we catch a move like this, if I'm up like $400 or $500 on it, like I'll take 200, 300 off the table, leave my main position floating for the main take profit, and then I'll just withdraw that money. Because now it's Sunday. It's Sunday. Let's put it this way: it's Sunday. I have people from the inner circle. They could close out right now, withdraw, be done for the week. Right, that's why we do that stuff. Mostly why I closed was one, to lock in profits, but two, because I also wanted to use some of that margin on the Nasdaq trade. So I actually wanted to enter the Nasdaq trade, and I wanted to use some of my margin for that. But yeah, we closed, bro, because you have to. It's the point. The point is to make money. Schedule for these public streams. We do these every Sunday at 9:30. Where we kind of set up the cycles for the week. And then I'm going to be doing probably what we're going to call like a fireside chat. We'll probably do the fireside chat. It's tough because like there's other streamers that I like to support. Like shout out my boy Abel and Kyle. So scheduling stuff around them is kind of tough. I'll probably be doing fireside chats on Wednesdays and Fridays. And the fireside chats, I'm going to be doing a specific topic. We're going to come on here. The first one's going to be about making a trading plan, where I'm going to be teaching for like 15 minutes, 20 minutes, just kind of going over like trading plans, how you should build one, what should be incorporated in that, how you actually go about doing that, how you document that so it makes sense and you can reference it. And then you guys can kind of just vibe and like ask questions and we can go a little further from there. Sometimes I'll bring on special guests. We'll chop it up, talk about certain things in the market. And then if you want to join like live trading sessions, like actual live trading sessions, then you guys can hop into the Inner Circle. The Inner Circle, we go live 3 times a week for New York session. So we're live Tuesday, Wednesday, Thursday at about 7:30 or 8:30 in the morning, depending what the market looks like. If I wake up at 7, well, I'm already up at 7:30. But if we're looking at charts at 7:30 and it kind of looks like it's a slow morning, better to wait till 8:30, then we kind of push it back. But we do that 3 times a week. And if you want access to that, you can grab that discount that ends when the stream ends, which I think gives you like 25 or 30% off or something like that. But yeah, that's when we're scheduled live. Could you also go silver if you got time for it? Yeah, we could take a look at silver right now. Wow, silver is pumping right now. What is going on with that? Is gold doing that? Gold is not doing that. Well, that is interesting. Let's take a look at this though. So yeah, I mean this is the same thing as gold minus whatever this 4-hour. This opened higher, huh? Interesting. Yeah, I wouldn't expect this to create a new high. Just like I don't expect gold to. A little cautious based on like how this opened, but I see the same setup. I see the same setup on here as I do on gold. I see the obvious supply, the obvious demand. Right? I see the reaccumulation, which is yet to be wiped. But there's a lot of absorption here. There's a lot of absorption here. This really put in some sell effort that didn't break. Like, that's interesting. But I think this stays range bound. I don't think it breaks out. Yeah, I'd want to trade this like gold. Like you kind of wipe this liquidity up into this area, and you can look for like those lower time frame sells. My problem with that is just like the absorption is like a little different on this. This looks a lot stronger than gold does. Yeah, a lot stronger. Like look at the sell effort on gold here, down here. It's not nearly as high as silver. Yeah, I proceed with caution on this, bro. I'd probably trade this the same way I would gold, just because that's my bias. I know you're probably personally looking at this candle. I wouldn't expect this to hold though. If you were looking for like, and again, if you were looking for a short on this, I would only want to short from like this premium pricing. And again, based on like current action and what kind of like live OB forms here. And I would want to do the same thing, kind of target the reaccumulation down here, very simply right down to that. That'd be like my setup. It's the same thing as gold, but again, I'm a little concerned with how good that looks. So it would have to be a really nice lower time frame setup. It would have to be a really nice lower time frame setup. Like it would have to be you really need like that change of character. Like you would need some sort of push up, hard change of character, a slow return, and then. But without that, like I wouldn't trust this. How do I open new positions for the same trade when it goes in direction? Do you wait for tracement then open more positions? No, always wait for a retracement. Always wait for no. I have a rule in my trading, right? If I am buying, right, the current candle is typically bearish, right? And if I am selling, right, the current candle is typically bullish. Right? Which basically means like I'm not entering in on a candle that is like I'm never even if I see this, right? Even if I see this bullish candle, I'm like, okay, I want to buy. I'm entering off of some sort of bearish candle. Like I'm not gonna wait for this giant candle and then start chasing the trade. Never in my life am I doing that. If I see that, I've missed the trade. That's it. Or I'm gonna wait for some sort of pullback. It's not worth me chasing. I don't chase. Because when I'm doing this, I know that I'm getting the price that I want. My price is coming to me and I'm executing. If it's going away from me or in my direction, then now I'm chasing it. I'm trying to grab an entry because it's moving away from me. I don't like that. So for me, like, no, never. I'm never ever in my life adding to a position after it's already made its move. Like again, when I added to Ethereum, like every time I added to Ethereum, like I'll just show you. I bought what I consider so inside of my course we teach something called a live order block, and I just enter on every live order block after the main one. So like we bought it here, awesome. I mean like we didn't re-enter here, but like after it like forms this structure here, like I'm in this all day long. All right, wiping all this liquidity here, forming a live OB. I'm in that all day long. That's that even retested in that. Boom, that's another entry. Wouldn't have entered here after did all this liquidity and formed this structure here. Boom, another entry. You know, so like I'm applying my same logic over and over. Like my entry model doesn't change ever. Like the entry model never changes. My entry model is the same over and over and over and over and over and over. And if you don't get it, then you don't take another trade. It's just that simple. You just don't scale into it. I'm a firm believer that you should go heavy early. Go heavy early. Like if I see what I want, when I get it, that's like I'm going heavy right then and there. I'm not waiting to get confirmations. Like I got my confirmations. I'm in this. I'm in it. Done. So yeah, that's how I handle new positions. Yeah, that's why I asked weekly looks solid. Yeah. I'll be honest with you. Silver looks a lot more bullish than gold does. I'll be real there. A lot more bullish, which might be saying something for gold. It might be saying something for gold, honestly. Gold might be the lagger there. I don't think gold's the lagger though. I think silver is just excited for no reason. I think silver is excited for no reason. I think this was just the open, and I think just it got overexcited, and I think it's just overplaying its move. All right. So any other pairs? Any pairs you guys want? Anything you guys want? Questions? We're open to pairs and questions. What time we got? 10:35. Give you guys like 10-15 minutes. Yeah, this Nasdaq's paying pretty well. I think somebody said GJ before. Yeah, okay. GJ. All right. So, looking at GJ. Let's just remove all the drawing tools. All right. So GJ had a nice week last week. Nice bullish move after some probably lower time frame accumulation. We look on the daily. Is there anything I particularly like on the daily? Not really. There's some interesting lows formed here. We broke this candle, so we grabbed all liquidity above here. Let's see. So we talked about GJ last Sunday, and we talked about the compression inside of here, right? So if you're curious about compression, go back to last week's video and look when we talked about GJ. We talked about how like when it's kind of fighting the same level of supply and resistance here, and it just consistent. Like this is what we're talking about on oil too, right? Oil is kind of like entering a period of like what's basically going to be compression. where it just eats away at this same resistance. Eventually you just squeeze higher, and we kind of talked about how my target for GJ was to go to 162.50, right? We were looking at this 162.50. Obviously that's been achieved. You know, we don't have any positions open on this for any reason, which is sad because we were, you know, short from down here. At this point, I think GJ just kind of continues its bullish run. What you guys have to understand about the yen pairs is if we look at the yen pairs from just like a weekly perspective, there's a reason why they're this weak, right? And that comes back to the interest rates, right? Does anybody know what's special about the yen interest rates? Right, write in the chat if you know what's special, right, about the yen interest rates, right? Why is this so weak from an interest rate from a fundamental standpoint, family? Let's see who knows. We talked about it at the beginning of the stream, so we'll see who was paying attention. Where the Nasdaq is flying now. TQQQ. Oh, you want me to look at the negative rate? Right, they're negative rates. Right, shout out Jude, shout out Ray, right? Good job, fam, right? They're negative rates, guys. So anything that has a positive rate or even a 0% rate is going to slaughter this thing fundamentally. It's going to just be smooth as butter up until the Bank of Japan finally decides to do something. Now, again, there is some important data coming out for the pound this week, right? What do we have, again, on our calendar, right? They have PMI all week long, right? PMI we expect to come out higher, which generally speaking is going to be seen as negative for them. So I would look for a reason to maybe, again, see if you can get into buys. Now, the problem I have with this is like there's no clear news cycle to be playing. There's no reaccumulation here. This has just all been markup. So when I see something like this and it's all markup, I'm only going to trade if we're getting really discounted pricing. So for me, that's just like a wipe of the nearest reaccumulation. So for us, that's here, right? That's this little range right here. So unless I can get discount pricing below here, I'm probably not going to look to buy or necessarily even trade GJ. So if you are looking at GJ this week, I would expect when PMI comes out to push us below this liquidity. And then after it does that, right, the important thing is you're going to monitor that range for accumulation. And if you get those signs and you're still within this price range, then you can begin trading it to the upside. But I would be looking with inside of this liquidity pocket, you know, somewhere right within this area here, right, for continuation buys on GJ. So that's like the 161.87 level, just to kind of continue that trend. Now, to be quite honest with you, yeah, I'll be surprised if we even get that. Because early week, this might just continue pushing up, and then the liquidity spike might just be back into pricing that is now. But that 161.80 would be like where I'd be most interested if I was going to try to get into this. Because if I'm looking at this from like a daily and a weekly time frame, like I have no reason to go against this trend until the market dictates a reason, and there's just no reason here. So I'd be looking at something like this week. If it pushes down, comes back up, you know, forms some structure, maybe grabs more liquidity, and then comes up, that'd be like the footprint that I would expect this week on GJ. We'll probably revisit this on Wednesday because that'll be right after PMI releases, and then we'll have more data and we can kind of see things. But heading into PMI, I wouldn't want to be buying this just because I think that'll trigger better pricing, and then once we get that, we can look for buys. So that's what we got there. EG, oh bro, you know I hate this pair. You know I hate this pair. This is all sorts of bullish. Wow. Okay. Okay. So yeah, this is clear accumulation. We're not going to break down the entire accumulation, but the accumulation starts roughly about here and forms here. The only important part of the accumulation you even need to identify is the fact that you formed a spring here, which is very obviously the grab below the range. Also formed, I mean, it didn't really form any sort of discernible order block on that time frame, but I'm sure it did on the 4 hour. No. Nonetheless, you have your spring and your test, which are just obvious because the cycle's already played out. So you have spring, test, you have your sign of strength here. It looks like you're kind of just expecting this to be your sign of strength, and these are your LPSs. So sign of strength, LPS, LPS, LPS. And this is just, again, a compression cycle. So just like GJ did. And you'll notice the structure is always the same. Like I could show you this same compression structure on like 5 different things, right? But that's the path for EG. Like it's really that simple. Like look, if you need examples of that structure, look at it on the Nasdaq, right? That's the same sort of compression nonsense as down here into here, right? It's the same thing that you have on GJ, right? It's the same compression until it breaks out. So that's very easy play. EJ, I would just trade to the upside. Do you set it and forget it or monitor live price action as it enters your zone? I monitor a lot. I monitored a lot. I don't do set it and forget it. I set it and forget it after my monitoring is done. Like Ethereum, I don't really look at Ethereum. Like Ethereum will just set off an alert and that's great. But like I'll show you, like, right, so when we entered Ethereum back down here, like I was monitoring this until, right, so we entered over here in this area, right? It made its first move up, great. That's a great sign for us, but we didn't even go break even here, right? Some people asked me if they could. I said you probably could, but I personally didn't. I left my risk in. Price came back, and then after we broke this high, after we broke back above this high, which took us a little bit, at that point, I'm break even and I'm done. Like, I'm like that, set it and forget it, because like all my management only needs to be done up until like my entry gets retested. Once my entry gets retested and price begins to move away, it's not my job to sit there and babysit it anymore. So like this trade, like I'm in this trade with my 0.33, like I'm chilling, I'm already paid, I set it and forget it. Same thing with Nasdaq. Like Nasdaq, at this point, you know, I'm still kind of monitoring this because like, yeah, I entered here and yeah, we moved away real nice, but just like Ethereum, like this hasn't really retested back yet. So in this case, like how I'm gonna manage this trade is I'm gonna wait for price to kind of come up, and again, hopefully, because price could just decide not to do this, but as price kind of like fills this wick and tests up into like this supply, I'll probably book some partials on my Nasdaq, go break even, and then tomorrow morning I'll kind of come back and monitor it, because what's probably gonna happen is we're probably gonna like break up here. And then, like, by, like, the morning time, like, New York session will probably come back and, like, wipe this entire range, to be honest with you. We'll probably come down, spike below here, make a whole bunch of structure, and then maybe it'll continue back to the upside. Because, again, these little type 2 accumulations, like, I hate these things. Like, I'll scalp this thing, but this thing is not going to, like, again, I don't think it's going to produce, like a range that never comes back. So, again, I monitored it up to a certain point. I have my rules, I have my parameters for that, and then once, you know, again, if this did something like this, it comes up, comes back down, and then it makes a new high, alright, cool. Done, dusted, set it and forget it. I don't need to do anything else with it. So yeah, that's how we handle that. Shared 8-hour setup in the chats. In the Discord. Let's see. In the chats. I don't see it in the chat, to be honest with you, bro. Oh, was that earlier? Oh no, I think you sent that earlier. Okay, hold on. Oh yeah, oh, okay, that's okay. Is that what you were sending earlier? Was that EG? EG? Oh, it was EG. Yeah. Oh yeah, bro, you're on point. Your entire chart. Yeah, I mean, you know this. I don't have to tell you this. Like, you know what you're doing, bro. We've established that. It's just a matter of you doing it, which is the struggle with a lot of traders. A lot of you guys, you know what to do. You know how to do it. You just don't do it. You know, that's the problem, right? A lot of this is you guys get stuck up here. You get stuck up in this analysis, right? Right? You get stuck up in the analysis. I need you guys, first off, if you're still on here, do me a favor. Write execution in the chat. Right? Write execution in the chat. Do me a favor. Begin executing. Trust yourself. Trust your strategy enough to actually execute. Because without execution, family, your analysis means absolutely nothing. Just means absolutely nothing. You should definitely be analyzing more than you execute, by the way. Should absolutely. Yeah, we got a nice $1,000 day, and it's only Sunday. Nice $1,000 day, and it's only Sunday, family. Yeah, we fucking lit. We lit. Alright, any other pairs? Any final pairs? Any final pairs? Any final pairs? Throw them in the chats. Throw them in the chats. If not, I will... Can you go over UCAD when you can? Yeah, we can go over UCAD. Absolutely, I got you. I got you. Solana, bro. Solana, I'm not analyzing Solana. Solana's going to do whatever Ethereum's doing. Solana needs to work on getting their network to not go down. I'm not looking at Solana. I'll look at it for you later in the chat if you want, bro. Like I'll do that for you personally, but like not on stream. Right, because Solana is it's not gonna do much different than Ethereum's doing. 80% waiting, 10% buying, 10% selling. Yeah, I mean, overall, yeah, but those 10% buying and selling, like a lot of people are still scared to do that. All right, so USD Cad, yeah. So we talked about USD Cad last week, and we kind of talked about how. One, it had a potential for a buy setup that never completed. We talked about like if it formed a change of character above these highs, that never happened. So like that setup never worked. But what we really talked about on USD CAD was like it going below this like lone candle structure, as we call it, which is exactly what happened. And we are now kind of sitting down here. So now that we've kind of filled this, the question is like, okay, so like what's happening here? Right? Is this accumulation? Is this maybe like a smaller redistribution that's actually going to kind of bring price further down? We also talked about like the order block that's down here that maybe could magnetize price. You know, I still think this is an area to look at, especially with oil running rampant. All right, the stronger that oil is, you know, the stronger the Canadian currency is going to be because, again, they're very reliant on oil in their economy, a lot of exports. So it trades with that. Taking a look at this, though, I kind of want to just take a look at this little like lower time frame range and see if maybe you could get like a setup here. Yeah, this is all sorts of choppy, huh? Wow. Yeah, I was gonna say you could maybe look to like buy off the lows here. The problem I have with this right away is like, yeah, we've got like this change of structure or change of character, right? But there's no buying activity, right? There's no big buying volume down here. Right, there's a lot of buying volume here that brought us nowhere, and then we kind of just dwindled higher. So to be quite honest with you, because of like that 4-hour order block down here, how strong oil is and everything like that, I would maybe look to play like a retest of here. Like this is like the most obvious like little sell setup that immediately comes to mind. Is like I would try. And this is like one of those trades that I talk about that are super high, like high risk of failure. Like the chance of this trade actually succeeding is probably somewhere near 5-10%. But the risk to reward on a trade like this would be pretty high. So the idea would be like to play, you know, the supply that's very abundantly clear from the wipe of these highs, order block formation on the 15-minute, right? So the idea would be like to short against this level, which again, it should react very quickly off here. The longer it sits up here, the worse this idea would be. You could probably run a stop to the wick. You could run it to the candle. That's all personal preference. We're going to measure it with the wick because that would be like, you know, the worst risk to reward you can get on here. So your setup would look something like that. And then I would just target the 4-hour order block down on the bottom. Now again, like I said, this is a high risk of like, you know, chance of failure, but this is a 1 to 14. This is the type of trade that I would risk like 0.25% on. Because with 0.25% risk, you're still, if this hits TP, you know, 1 to 14, you're still looking at a nice, you know, 3-4% trade. This is the only thing I would look for on USD Cad. I was going to say you could maybe look for the buy setup, but to be quite honest with you, with no buying volume, I really just don't trust that. And with the way that oil is looking, oil is still looking very strong into early week. So if you want to take this setup, again, like do so at your own risk. But yeah, this like, I mean, for the risk to reward, this looks real good. I know I know a few of my guys are going to look at this and think it looks real good too. Are we still live? For some reason... my live stream is stopped. Alright, let's see what else we got. Euro AUD. Euro AUD, I thought we already did. Did we not? Oh, no, we didn't. I've talked about that with the news bias. Euro AUD. So, we'll take a look at Euro AUD real quick. Okay. Yeah, my Wi-Fi is taking a hit personally. So, if the stream goes down, I apologize. Little laggy, but we're still alive. Okay. Yeah, I just noticed my internet took a little bit of a hit. I paused the music though. All right, so Euro AUD. All right, so we talked about this, guys. Right, we have interest rates on both sides this week. We have Australian interest rates and we have Euro interest rates. We know that the Australian dollar is looking to what? Raise them, right? Very obvious. And we know that they're looking to raise them. We know the euro is looking to keep theirs at 0%. So fundamentally speaking, this should sell off, right? Should. The market, again, is going to be based off those policy statements, right? They can both come out with the AUD can hike and the euro cannot hike, but the Australian dollar, right, their central bank may go out and say, you know what, we're not going to commit to further hikes, while the EU says they are going to begin to commit to hikes, and that can flip the switch on everything. Right, those policy statements are the key for like the full week move. But with that being said, we do expect some reactions to the downside. So looking at this, it's already been kind of trading to the downside. Again, that's what their interest rates favor. All right, we know wicks fill, so we expect this wick to fill. So the question is then, what happens after this wick fills? Does this give us like opportunity to go short the rest of the week into some of those interest rate decisions maybe? I'm a little concerned about this range, but again, if I'm gonna keep it simple based off the way that I trade and the logic that we use, I'm gonna just use the wick fill and then a new range expectation right above that, right? So I'm basically expecting new cycle to form right here, and we'll probably look to enter again, like this order block's an area of interest, but typically when you have like news and like obvious events, I would expect this to kind of get ran on. So I'm looking to like enter right above this liquidity. Again, I'm not going to personally be trading this because this is not a pair that I specifically care to trade. But I would look to like short bias off of that. Again, your entries are always your risk management in terms of where you put your stop loss and everything is always going to be based off of the structure of what it looks like when you enter. So I only put these here to kind of showcase where like you would absolutely invalidate the setup, right? This is just like if it pushes to these levels, your setup is completely invalidated, and you know we have to kind of look otherwise, which would just be kind of like a breach of like above here. Again, I don't even think we would necessarily push that high. My risk wouldn't be like that, but you guys get the point. And then I would look to just trade back into the bottom of the range here. Again, I'd probably look to take profits on this sooner rather than later, just because what those monetary policy statements say might begin like to drag this out into a further cycle. and I wouldn't want to sit in there too long. So this is like a 1 to 5 that you could look at. Again, these are not pairs that I trade. I'm not currently trading currencies. I'm not even going to look back at this after this call. But based off of what I see right now, that would probably be your most obvious play. Let's see what else we got. US30. We went over the Nasdaq. US30 would be the same thing. So you can rewind the stream, and you will see my expectations on that. But we expect it to stay range bound is the ultimate answer there. XRP. Guys, you guys got to understand, a lot of the stuff you're asking about, it moves with the other stuff we already talked about. Like, XRP and Ethereum are the same thing. You're just waiting for it to push up into here. Like, we're bullish XRP to like 50 cents. It's the same thing as Ethereum. It's literally, this is the same setup as Ethereum. It's like no different. You know, Ethereum's a little stronger, so be it. But it's the same idea. Right? That's when you guys ask me like to look at Nasdaq and then to look at like US30. Like, yeah, there's little things that will affect each one differently. Obviously, the indices are made up of different stocks that affect them, that are weighted in them. But generally speaking, the sentiment of the overall market is very similar. There are some days where the Nasdaq, because tech is just getting smacked, like their earnings are coming out very specifically for tech, yeah, the Nasdaq will lag behind or make a certain move. But generally speaking, they're all the same. So when you look at one, you look at them all. All right, there's no reason to dive that deep. All right. Any final questions? No more pairs. Any final questions? If you want to pick my brain, you have 2 minutes. 2 minutes if you want to pick my brain. If you guys want to trade live with us and catch trades, let's not use that as an example because I'm greedily in that by myself. But trades like this, then again, you guys could hop in the inner circle. You guys don't have to take my word for it. You can ask other people in the chat that are a part of it. Again, you guys have about 4 minutes left on this. Can I look at Luna? Honestly, I will look at Luna's price. I just want to see what Luna's priced at. Let's look at Luna. Let's take a look at this. Yeah, what a surprise. Yeah. There you go. That's Luna. That's Luna, family. But listen, I appreciate y'all that hopped on. I appreciate y'all that stayed on. If you guys threw a like, if you're subscribed to the channel, I appreciate y'all. If you guys are inner circle, y'all know that I will see you guys in the morning. Not tomorrow morning, Tuesday morning. Yeah, so family, listen, I will see you guys for those live sessions. Wednesday, we will be live also at 9:30 p.m. We're going to be going over how to develop a trading plan. It's not going to be my specific trading plan, but it's going to be for you, however you trade, whatever your confirmations are, things that you should be implementing into your trading plan, what you can do in like a Google Sheet, how you could write it down, all the stuff you should put inside of that. So make sure you guys tune in for that. That will be a live session. The link should be live in the Discord and stuff. If you guys are not